Today is April 15th. And if you have a W-2 job, you probably already know that. File your return, maybe get a refund, move on with your life. But if you started freelancing this year, or last year, or even 2 years ago, and still haven't figured this part out, today is not just tax day. Today is also the due date for your first quarter estimated tax payment for 2026. And if you're hearing that for the first time right now, you are not alone. But you might already owe the IRS money you didn't know you owed. Here is where this gets weird. The United States has over 76 million people doing some form of freelance work. That number comes from multiple workforce surveys conducted in late 2024 and early 2025, with some estimates running even higher for 2026, 76 million. And the tax system that applies to every single one of them was not designed with a tutorial. There is no onboarding email. There is no pop-up that says, hey, by the way, you owe taxes 4 times a year now instead of once. You go from W-2, where your employer withholds everything automatically, to 1099, where the IRS expects you to do all of it yourself. Same government, same rules, zero handholding. I'm going to be honest. I didn't fully understand this system until about a year ago. I thought estimated taxes were something accountants worried about. Turns out there's something everyone without a payroll department worries about, or should worry about. So today, I'm going to walk through the whole thing. What estimated taxes actually are, how to calculate what you owe, how the penalty works, and the 3 or 4 moves that keep you out of trouble. All of it based on IRS rules, publicly available forms, and math you can check yourself. Let's start with the part most people get wrong. A lot of new freelancers think they'll just handle everything in April. 1 return, 1 payment, done. And that makes sense if your only reference point is a W-2 job. But when you're self-employed, the IRS doesn't wait until April to want its money. It wants a cut every quarter. The due dates for 2026 are April 15th, June 15th, September 15th, and January 15th of 2027. 4 deadlines, 4 payments. And if you miss them, it is not just a late fee. It is a penalty that compounds. You opened the tax app last week. Maybe it was TurboTax. Maybe it was IRS.gov. You looked at the number on the screen. You closed it. You opened it again. That number didn't change. So let's talk about that number. Take a person in Raleigh, 29 years old, doing freelance graphic design, pulling in about $68,000 a year in gross revenue. No employer, no withholding, no benefits, just invoices and a checking account. This person thinks they're making $68,000. They're not. Here is what actually happens to that money. Start with $68,000. The IRS takes self-employment tax off the top. That is 15.3%, but it is calculated on 92.35% of net earnings. So take 68,000, multiply by 0.9235. That is 62,798. Now apply the 15.3% self-employment tax. That is $9,608 gone, before federal income tax even shows up. Now take the federal side. This person gets to deduct half of that self-employment tax from their adjusted gross income. So their AGI drops to around $63,196. Subtract the 2026 standard deduction for a single filer, which the IRS set at $16,100. Taxable income lands at roughly $47,096. Federal income tax on that, using 2026 brackets for a single filer. 10% on the first $12,400. Then 12% on the rest up to $47,096. That is $1,240 plus $4,163. Call it $5,403 in federal income tax. Add self-employment tax back in. $9,608 plus $5,403. That is $15,011 in federal taxes. And we haven't even touched state income tax. North Carolina dropped its flat rate to 3.99% for 2026, according to the North Carolina Department of Revenue. After the state standard deduction of $13,000, that is roughly $2,000 in state tax. Total tax burden, roughly $17,000 on $68,000 in revenue. This person keeps about $51,000. They earned $68,000. They kept $51,000. The rest just left. And nobody warned them when they filed their first LLC paperwork. Nobody sent a letter. The system just expected them to know. I have a friend who started doing freelance web development about 3 years ago. Made decent money the first year. Did not make a single estimated payment. Filed in April. Owed the IRS $11,000 plus a penalty. This person is not irresponsible. This person has a degree, reads the news. Just didn't know. Anyway, here is where the penalty math comes in. The IRS charges an underpayment penalty if you owe more than $1,000 at filing time and you didn't pay enough through estimated payments during the year. For the first quarter of 2026, the underpayment penalty interest rate is 7% annually. Per IRS Revenue Ruling 2025-22 published in November 2025. Starting April 1st, the rate drops to 6% for the second quarter. Per Revenue Ruling 2026-5. These rates are set by the IRS quarterly, tied to the federal short-term rate plus 3 percentage points. That penalty is calculated on each quarter's underpayment separately, from the due date until the payment date. Let me put that in real terms. If the graphic designer in Raleigh owes about $17,000 in total federal and state taxes, and they made 0 estimated payments, the IRS doesn't just say pay up in April. It says you should have paid roughly $4,250. On April 15th, another $4,250 on June 15th, another on September 15th, another on January 15th. Each quarter you missed, the penalty clock starts ticking from that due date. And that is all public data, public math. Not personal advice for anyone's specific situation. But the numbers paint a picture that is hard to ignore. But here is the part that should actually make you stop scrolling. The penalty is not the expensive part. The expensive part is what happens to your cash flow when you don't plan for it. Because the designer in Raleigh spent that $17,000. It was in the checking account. It looked like income. It felt like income. They bought a laptop with it, upgraded the apartment, went to a wedding in Denver. Normal life, reasonable decisions. Every single one of them made sense at the time. But when April came around, the money was gone and the bill was not. That is the trap. It isn't that freelancers don't want to pay taxes. It is that the money sits in the same account as rent, groceries, and everything else. And nothing in the system puts a fence around the IRS's share. The government built a withholding system for employers that automatically separates tax money from spending money. Then 76 million people left that system. And the government said, good luck figuring it out. Classic. Let me give you something useful now. Now I am not telling you to do any of this. But here are the levers that exist in the system right now. The first thing is calculating what you owe. Pull up IRS Form 1040 EES. You can find it at irs.gov/forms-about-form-1040-EEs. The form has a worksheet. It walks through your expected income, your deductions, your self-employment tax, and your credits. The output is your total estimated tax for the year. Divide that by 4. That is your quarterly payment. Second, the safe harbor rule. This is the thing that keeps you out of penalty territory. Even if your estimate is off, the IRS says you avoid the underpayment penalty if you pay at least 90% of what you owe for the current year. Or, and this is the one most people lean on, 100% of what you owed last year. If your adjusted gross income was over $150,000 last year, that threshold goes up to 110%. So if you owed $12,000 in 2025, pay at least $12,000 in estimated payments across 2026's 4 quarters, and you are safe. Even if your actual 2026 bill is higher, the IRS won't penalize you. You'll still owe the difference, but no penalty. The IRS built an escape hatch into its own penalty system. Most people just don't know it is there. Third, the separate bank account move. This is not a tax strategy. This is a cash flow strategy. Some freelancers open a second checking account. Every time an invoice gets paid, they move a percentage, usually 25 to 30%, into that second account. That money doesn't get touched. It sits there until the quarterly payment is due. Then they pay from that account. It is not sophisticated. It is just a fence. The same fence that a W-2 employer's payroll system builds automatically. You're just building it yourself. Somewhere in a kitchen in Indianapolis, someone is staring at a phone with a spreadsheet open, trying to figure out if they need to send the IRS a check today. They've been self-employed for 14 months. They've never made an estimated payment. The phone battery is at 19%. Fourth thing, the IRS direct pay system. Go to irs.gov/payments. Select estimated tax as the reason for payment. Select 1040 EES. Enter your Social Security number, filing status, and the tax year. Pick the quarter. Enter the amount. Confirm. It is a bank transfer. Takes about 2 minutes. No account needed. No fee. There is also EFTPS, the Electronic Federal Tax Payment System, which requires enrollment but lets you schedule payments in advance. Both are free. Both come directly from the IRS. Neither charges a processing fee unless you use a credit card through a third-party processor. Fifth, if you already missed the first quarter deadline, which was today, April 15th, you can still make the payment now. The penalty accrues from the due date, but it stops accruing once you pay. So a payment made April 18th is penalized for 3 days, not for the entire quarter. The IRS calculates this on Form 2210, which you can file with your return to compute the exact penalty, or request a waiver if you had a reasonable cause. And one more thing that nobody tells you. If your income isn't evenly distributed across the year, you don't have to pay the same amount every quarter. The IRS allows what is called the Annualized Income Installment Method. It is Schedule AI of Form 2210. It lets you calculate your estimated payment based on income actually received in each period rather than dividing the annual total by 4. This matters if you are a freelancer who made $8,000 in Q1 and $30,000 in Q3. You shouldn't be penalized for not paying Q1 taxes on income you hadn't earned yet. Worth reading twice. Let me pull this all together. The graphic designer in Raleigh, 29, $68,000 in gross freelance revenue, kept about $51,000 after taxes, didn't know about estimated payments for the first year, took the penalty, started paying quarterly in year 2, set up the separate bank account, moved 28% of every invoice into it, used IRS direct pay on the 4 due dates, used last year's tax bill as the safe harbor baseline, paid $12,800 across 4 quarters. The actual bill came in higher, owed the difference in April, no penalty. By any reasonable standard, this is exactly the person the estimated tax system should have been explained to on day 1. The system assumed they would figure it out. The system was wrong. That is not a broken person. That is a broken onboarding process for 76 million Americans. Here is what you can do tonight. 1. Go to irs.gov, pull up Form 1040 EES, run the worksheet. 2. Open a second checking account this week and start moving 25 to 30% of every payment you receive into it. 3. Set 4 calendar reminders: April 15th, June 15th, September 15th, and January 15th. 4. Go to irs.gov/payments and make your Q1 payment if you haven't already. None of this is complicated. The math is not the hard part. The hard part is that nobody told you the math existed. You didn't miss this because you weren't paying attention. You missed it because the system doesn't send reminders. To the people who need them most, now you know.